In the next few minutes, I'm going to tell you exactly what is the difference between the supply and demand zones and order blocks in the Forex market. Watch to the very end. Let's get straight to it. So in the Forex market, we have higher time frames and lower time frames. What happens on higher time frames happens on lower time frames, and also vice versa. So everything in Forex is pretty much relative. So let's mark out a random demand zone in the Forex market. So right here we have a demand zone area. Now pay attention that this is just one candle on a 4H time frame, but it is a 4H time frame, which means that this whole zone actually is a demand zone, and it's quite big, and we do not know exactly where to enter from unless you actually want to enter on a 4H time frame. But personally, that's not what I do. So 4H and daily time frames are the areas where I actually find demand zone areas or supply zone areas. They are large areas in the Forex market. Now I'm going to drop down to 1H time frame. So now that we're on a 1H time frame, 1H is actually where I find order blocks. Now order blocks is where I actually find specific candles within a demand zone area that is responsible for the impulsive move. So let's identify it immediately. Right here. So we have this doji candle right here. This doji candle is actually the order block. So this larger box is our 4H demand zone. So the larger blue box is our 4H demand zone, and this box within the box, this candle right here, which I'm going to identify for you right now, this doji candle right there is actually the order block from where the market makers actually place the orders and push the price to the upside. You can clearly see that there was a strong impulsive move from this candle over here. This candle is our order block. Once again, demand zones are areas in the market, and order blocks are specific candles within those areas that are responsible for the price moving to the upside or the downside impulsively in a sharp move. Now, if you're wondering what indicators am I using to mark out my charts in this simplistic manner, I've got high-low day box, which is responsible to mark out the highs and the lows of each day. I've got kill zones, which is responsible to mark out the Asia session, and I've got multi-time period chart, which is responsible to mark out all the 5 days within the week, both the highs and the lows, where it starts and where it ends. Each box is responsible for the whole week. The smaller boxes are responsible for the whole day, and the third small box is responsible for the Asia session. So I have everything covered within these 3 indicators, and it's going to help me to know where are the important levels to trade as a smart money trader. Now let's go into example number 2. So we are back on a 4H time frame. Okay, once again, 4H is pretty much for me a higher time frame. I can see that there's a demand zone right here, and I'm going to mark it into the future. Okay, but we do not know what the price is going to do when we mark out this demand zone. Okay, so now when we drop down to 1H, we can actually see that the price actually broke this demand zone. It broke it and then retested this demand zone area and then continued going to the downside. That actually shows that this demand zone was actually a solid demand zone. So the price went straight through it, then retested it. That happens often. If you mark out your zone and price goes through it, do not remove the marking. Leave it on the chart, because there's a high chance that the price is going to retest that level. So that's our 4H demand zone. Okay, it was our support, but it now turned into resistance. Now there is a specific candle which is responsible for pushing the price to the downside, and it's actually this candle over here. I'm going to zoom in so that you see it very clearly. This candle over here is responsible for the retest. This is our order block. So the larger blue box was a 4H demand zone area. Now this smaller candle is our actual order block, specifically break a block, because the price broke this level. This demand zone candle was a demand, turned into a supply zone, and that's the reason why this order block is actually a breaker block. So these are the differences between higher time frame zones, which are usually supply for demand zone areas, and lower time frame zones, which are actually order blocks. So there you have it. If you are new to Forex trading and you need somebody to simplify the complexities within the Forex market in a simple, digestible manner, then make sure that you follow the links in my description section below. I'll see you guys in the next one. Take care.